Before we go ahead into this podcast, the disclaimer is registration granted by SEBI, membership of BASL, and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investments in securities market are subject to market risk. Read all the related documents carefully before investing. With this disclaimer, let's move on to the main part of the podcast. Here is the Nifty's daily chart taken from our website. As you can see here, Nifty has been scaling new highs for the last 2 to 3 weeks, which is a very positive sign. Along with Nifty, broader market indices, Nifty mid cap and small cap indices are also showing strength, and they are also trading at new all-time highs. So the current ongoing rally is not just concentrated among the large cap stocks; it is spread among the mid and small cap spaces as well, which is a positive sign. And coming to the market status from the owner's perspective, we are in confirmed uptrend because the Nifty is trading at new highs, and we had seen an occurrence of one distribution day uh, around this time. And currently, distribution day count is just one. A distribution day is when Nifty declines 0.2% or more on volume higher than the previous session. That signifies that there is a sharp selling happening in the markets. And whenever that happens, we count it as a distribution day. And it is very important to track distribution day count whenever the market is in a confirmed uptrend or uptrend under pressure, because it tells us that the market is going to top out in the near future. And for the downtrend, for the downgrade to under pressure from here, we would see distribution day count increasing to 3 or 4, and Nifty breaching its 50 DMA, but that is very far away from current levels. So that is not going to happen at least for a small 1 or 2 weeks. If the if the no major action happens in the country or globally, but going by the indicators or going by the market price volume action, we are going to see consolidation or Nifty scaling further higher from here. And some of the stocks which are in news and which will be under radar in the today's trading session. One is Cochin Shipyard subsidiary, that is Udupi Cochin Shipyard, has signed a contract with Wilson, which is a Norway-based company, to design 8 vessels, that is cargo vessels. The overall estimated cost of these vessels is around 1100 crores of rupees, and the company plans to execute this order by September 2028. Next is Godrej Properties has acquired 2 land parcels. One is in Pune and another one is in Bangalore. Pune land parcel has a revenue potential of 1800 crores of rupees. And in this parcel, they are planning to develop housing as well as high street retail space. Coming to the Bangalore land parcel, the revenue potential is expected around 1200 crores of rupees upon development. Ultratech Cement has commissioned new capacities in its existing unit at Tadipatri in Andhra Pradesh, around 3.35 million ton per annum capacity of clinker and 1.8 MTPA of grinding capacity. In the month of June, we have seen foreign institutional investors being net sellers for an amount of 2,000 crores of rupees, which is not a major selling. But if you compare with the domestic net buying, which was around 28,000 crores of rupees, which is a very big number when compared to the net sales by the FIS, and that reason can be attributed to the Nifty scaling new highs, because on the net basis, institutional investors were net buyers in the Indian market, taking Nifty to the new levels. Coming to the global market update, Friday night, US market closed in the negative territory with a decline of 0.1 to 0.7% lower. Asia markets are trading with a positive cues, with a positive bias, we can say. Nikkei, Kospi, and Shanghai are trading with a gain of 0.1 to 0.3% gain. The global cues are mixed. SGX Nifty is also indicating a slightly positive opening with a positive bias, but we can say it's going to be more of muted action on the India's Nifty front as well. For the chart of the India, we picked GAIL India. Currently, it is trading in the ideal buy zone. You can see here it is trading 3% from the pivot. The previous breakout has happened on very sharp, sharp breakout, and the volume has also been higher. But within the next session, that is on the Tuesday, which sharp selling has seen in the markets, this stock has also come under pressure and closed below pivot significantly, and the volume was also on the higher. So you can say it's a mostly a failed breakout on the first instance, but after which the stock has consolidated and again came back to its ideal buy range. The volume has also been on the lower side, and we would like to see volume increasing from here, and if it picks up, we can consider it for accumulation because the ratings are looking very good for the company. EPS is at 88 and RS rating is at 77, which is very good. Number of funds has also seen very good improvement in the last 1 quarter. So overall ratings are very intact. The only concern is recent failed breakout on the first instance, but that has been the case for most of the stocks, not just with GAIL India. It has been the case of 90% or 80% of the stocks in the Indian market because of major macroeconomic news. Thanks for joining today's pre-bill. Have a good trading session.